Hey, welcome everybody. This is really a quick update for those that came to not only the Traders Expo. We gave a great presentation, which I thought was pretty good because it was accurate information and stuff that we were teaching in our live trading room. And what you see in front of you is, if the video is not of clarity, it's because I'm recording off a remote computer to our live trading room. So I just wanted everyone to see, this is first and foremost the stock room. So what we have in your upper left corner is the spiders right here, the Qs, the diamonds, and the Russell. And all of these are 1 hour charts. This is think or swim with the person's pivots and PPS study. Now, it's interesting because what I was talking about was at 150, there's a little line in the sand that we were looking for the market to break out right here of the, this is the weekly pivot, by the way. These are daily pivots. The weekly pivot is blue, the daily pivot is fuchsia. And what I was looking for was a close over 155.33 to start initiating back long positions in the Russell. So that was number one. So we did one of our focus this morning, and again, that was Wednesday morning. Some of you may have seen me on Market Drive on TD Ameritrade on Tuesday morning. Great little segment there. We talked about the bullishness in the market, that the one indicator that has led me to be bullish this market still is the breadth, and I'll get into that in a minute. We have positions in this live trading room: long GE, long Hess, long Oxy, short bear put spread in TLT, a short position in BNQ, which is the Real Estate Investment Trust, long position in Wells Fargo, long position just established in Tilray, and it's not doing much. This is the pot growing. This is our high risk trade here, the medical marijuana, or the pot grower. It's what we call the pot growing stage. And also long position in Twitter, and that's what we have, as well as a long IWM position in an option strategy. We were long the 155 strike, short the 160. Now, that particular option trade, guys, I want to just give you some insight. Let me see if I can flip over to the other screen here. Here is a better depiction of that. So what we were doing with the IWM, or what we have done with this position, is we bought a long call spread 55.60 back over here. When the market had rallied, we then on about July 1st, I think it was, on that open, said, this is almost near that 160 max profit target, but there's too much time left on the options. We're not getting paid what we should. So that's when we initiated a short call spread against the long call spread. But we did a 161, 164. So we did a 3 wide strike out of the money against a 5 wide strike that was deep in the money. 155 was our strike price that was long against the 160. So again, 155, 160 bull call spread, shorted against that, kind of like a poor man's covered call strategy, so to speak, but using call spreads against a call spread. So we had a bull call spread and we initiated a bear call spread. Then as the market went down over the last few weeks, or as you can see, the trade moved back down. What we initiated was we just covered we sold the spread at $1.05. We bought it back for around 35 cents. So we took a net credit there, and that helped finance the bull call spread. Now today, this morning, I sent an email alert out to everybody and saying, and I've been talking about this the last couple of days, especially in here, we see the PMC indicator. This is the relative strength tool. Volume was picking up. I said, you know what, guys? This market is starting to show some money flow pulling positively into the market. Let's buy back the 160 strike call. We did that today, so now we're just naked. We did that this morning at around 9:40. It's about 10 minutes Eastern time, about 10 minutes after the market opened today. We bought back the short side, the 160 call, and it was like perfect timing because, as you know, today the big performance in the market, or of the stock market, was in, again, the Russell. So that's how I am looking at the Russell to potentially get up, if I may be so bold, is I believe we're going to see the market start to, if we could maintain double daily closes and even a weekly close. So let's take a look at that weekly close and get that chart into Zoom. I'm not only am I thinking this has been a delayed reaction, but I think the market's easily going to try to attack this last conditional change resistance line in the sand, possibly around 162, 163. That's what I'm expecting this particular leg breakout. We could clearly see there's some decent volume action into, at least by using on balance volume. And so I think there's now time that we're playing the condiment trade, is what I call it, because I think the Russell is going to finally play catch up, at least try to maintain an increase in valuation and against what the S&Ps and the Nasdaq has done. All right, so that is, if we can maintain the structural strength that we get made today on Wednesday, I think the follow through, if we just maintain that pace here and we close above for the week, listen to this number, 155.33 to be exact. That to me technically, and we closed at 157.26. So unless we get an amazing equal and opposite, which means the market rallies today and then Thursday the market comes all the way back down and we do an equal up versus an opposite down, then this trade's not going to work and we're going to have to scrap the 155 side, right? So we'll just get flat. But I think that the way the money flow, the breadth of the market, it looks very strong from here. All right. So let me get into the algo room. And but before I do, I've got this page up. Let's take a look at the advanced decline. This is our advanced decline. Now, many of you have seen this and you've seen my YouTube videos. Many of you guys, that if you were at the Traders Expo, this page is what I was trying to show you, and I was also trying to allude to this on Market Drive on TD Ameritrade's TV channel. The breadth of the market has been absolutely one of the best indicators for this market this year. Let's take a look at the S&Ps and just describe to you guys why was I in a bullish mode. One of the things I've been talking about from a very simplistic point is that the market has been maintaining structural strength above the person's pivots for the month. That's this blue line here. So that's one. Two, we have a rising moving average. Three, we did have a PPS buy signal. And four is this right here. The advanced decline, the AD cumulative, the advanced decline, the cumulative ratio line on the S&Ps. Now, we don't look at the breadth that a lot of people teach on the NYSE. I don't look at the tick. If I'm trading S&Ps, I take a look at what the breadth of the S&P is doing. And so as you can see, both today on Wednesday, we had it wasn't a very outrageously strong day, but we had 343 stocks positive, 149 negative. So after earnings on Wednesday, we had Ford, we had bad news from Tesla. PayPal had a decline. Wednesday's aftermarket is really going to affect the Qs, maybe not so much the S&Ps. So with that stated, how much higher can I expect the S&Ps to go? I think 303 level, 303 is going to be a topside resistance level in the sand. And if we have a strong close greater than this line in the sand that I'm drawing, which is around 301.90, round up 302. 302 up to 302 is going to be strong resistance, but a weekly close, and we won't know till Friday, greater than that, man, I don't want to freak everyone out, but there's another resistance at 310. So that's a bad 310 drawing. But 310 is a big number, and there it is right there in front of us. So that would be kind of spooky. But at the very least, let me explain that right now, the advanced decline just made another new high for the year, and it supports new highs in price in the marketplace. Another thing that's interesting is on balance volume broke out. So that shows there was at least participation of money coming into the market at these highs. The market had accepted the highs. Now we had a trend, a small pullback, and I quite frankly thought we would see more of maybe a small 1% pullback in here ahead of the Fed. But we're still along the market, as I shared with you our positions in our weekly advisory service, weekly thoughts and observations newsletter, and that's what we cover in the live trading room in the stock room. So with that said, what does the rest of the indicators show? Well, this is my proprietary volume indicator, and it is starting to show, and it confirms that there is good volume in the market. So I am expecting follow-through upside in the S&P 500. And this is based off of, again, Wednesday's trade action. In the NASDAQ 100, with the whole list of stocks in the Qs that did poorly, and I want everyone to remember, Facebook actually had a good report. They beat top line, bottom line, gave positive guidance. Subscription growth rates increased, which is amazing. So to me, that was a very positive thing. The breadth in the NASDAQ, The cumulative advanced decline broke out to a new high, but it didn't in the Dow. Why? Why did the Dow not break out? It seems to me that there's maybe money flow coming out of high dividend, large cap, or the mega cap stocks, and possibly it's coming right into here now. We're seeing rotation out of the Dow and into growth stocks, and that, my friends, is pretty positive. So if we take a look at the Russell one last time, if you say, John, are you sure this thing could pop? Well, I look at the advanced decline, and while it did not break out to a new high, it did take out the prior high level in here. And if we get some follow through strength, we did get a little uptick in volume. My volume analysis was, it could have been better. I'm not gonna sugarcoat it. It is what you see. But bottom line is, if by Friday we maintain the close greater than this X in the line in the sand kind of space, then easily I see us coming back up. And what a coincidence, 162.64, call it 163, somewhere up in that zone is where I think we can see almost within the next 5 to 7 trading sessions on a daily chart. So that gets us into next week. That's where we should see the market. From a simple chart perspective, folks, this looks like we have kind of like a little trend, a slight bull flag, and the price measurement kind of gets us right near. If you measure from here to there and add that to here, you get this. So, that's kind of portraying an upside objective in the marketplace. So we'll see if what I don't want to see is what we call that equal and opposite, which is like the market rallies and then the very next day it just flops right back down. One of those type of things. You get this great little run and then bang, it immediately rejects. That we don't want to see. So I don't want to see the market get back between Thursday and Friday's close. I don't want to see it below 155. Needs to hold 155.33. That's our magic number. Write that number down. Record, review 155.33. If this market flops and closes right back down underneath there, then we're back to more trading range environment for the Russell. But if this is now where we can get at least a 2-day close greater than that line in the sand, more importantly, a weekly close greater than that line in the sand, we've got some fabulous opportunities for more upside profits in that 155 strike IWM call. All right, let's move over to what I wanted to share with you guys as well, and what I did share with you at the Traders Expo. How is the live trading room? Now this, our clients get, you can flip back and forth. It's just a matter of going, and I'll share that with you in a second. But this was the this is what everyone, when you come to a live trading room, this is what you see in our trading community. So you don't need to hear me talk every 5 minutes, because I don't. But what you can see in the chart, all of these are strategies running in the live trading room. So just like you see on the board here, you'll see on the 15-minute, right before the 9 o'clock session, it had a short position. It got out. It went long. It took half the profit. You could see long 2, got out a half, rode the trade all the way. Another wonderful, profitable ride in the S&Ps on our 15-minute model. Let's take a look and share with you how the 5-minute short term for scalpers did. So this thing caught an amazing amount of trades today, and it went had a long, got out a half, trailed a stop. Went short, got kind of stopped out with a profit though. Went long, got out a half, trailed the stop, got stopped out there. It actually went short for a little loser, went long, made money. Net gain today. Great trading session for a what I think a lot of people would call a choppy, trendy up day. All right, next, the S&Ps, as I try to explain and how I teach people to maybe give an edge to their trading perspective in the market, use the spiders, use the breadth of the spiders, and this is the S&P 500. And we ended up with 343 positive versus 149 negative in the advancers versus decliners. This is my proprietary volume indicator, and you can see all day, since even in the late afternoon, we got from 2:30, and this is again exchange time, which is Eastern Standard Time here. We got a nice run in the market. So this last trend up came with increased breadth and increased volume. So that would have been a good sign to get confirmation and validate to stay long in the 15-minute and to have longs going on that again, 5-minute model here in the spiders. This is a swing trade model that we have for people in the spider, and you can see it right here. Spider, 60-minute long. This is shows you where you're long, and it shows the strategy P&L right now up 900 and change. This is a daily chart. We added this strategy to the system. It's SPXL. It's a 3-time leveraged ETF, but this is a daily chart on SPXL. It reversed, went long, and it's already built in a little profit there. We have the VIX, the volatility VXX. We have it on 2 time frames, the 120 and the 60-minute. Crude oil. Interesting day with crude oil today. It was, we call it Prince Spaghetti Day, Wednesday. Remember Prince Spaghetti Day, those commercials? Not much happened today, and it's the energy information report that comes out at 10:30 this morning. A couple things. Why didn't it fire off any generated algo strategies? It did one here. It tried to go long. It stopped out for about 6-tick loss, and it never did anything all day because the volatility in the market was too great for the parameter settings. What are some of those parameter settings? Well, first and foremost, I'll share a couple with you in this model. Just to let you know, this is the latest build that we've had with version 17. It says version 2. A lot of great things in this program, by the way. What time of day we trade, we optimize all of that. Here's the situation. Trading 2 contracts, that's 35 cents. 35 cents times 2 is $700. You can clearly see max trade loss $700. It ain't gonna fly. So today was a little bit too much for the market to generate those types of trades in that risk parameter. So it didn't fire off any trades. Here's the British pound. We've had a really good run with the British pound. It did not do too well today. It got a little chopped up because why? Most of the action happened at 3 o'clock in the morning straight up. Now, we've been bullish in the pound for the last week, and we've had some really decent trades in the pound. Yesterday was a pretty decent day. The day before, we had an unbelievable day, caught all of these little swings, and I'm just going through and sharing with you exactly what this trend system has done, or this trade system. Caught some really nice big-time runs in the market. So that's, I mean, win, lose, or draw, we like to share with you what the net results are of the strategies. And, you know, after big run-ups like this, one of the things that we always try to tell people, listen, we only run strategies from about 8:40, 9 o'clock in the morning till about 2 in the afternoon. And just to validate that statement, let's double check. And same strategy, V2, and hit format, and you'll see. Add 115 minutes to 7 a.m. See, add start time here, and you'll notice that's about, what, 120 minutes is 2 hours, so that's 8:55 until 2:25 in the afternoon, minus 10, which is 2:15. So this trade system really runs on average from 9 in the morning to 2:15 in the afternoon. Why? Well, we don't have the room running 24 hours. So how can we have a system that says, look, this thing made money in the time that you're not trading with us? That doesn't make sense to me. I think it's, to be fair and impartial, to have a live trading room where people are in the room. We should only have algos that run while the room's open. Besides, this is a product that everyone can buy and purchase a lifetime, and you can run your own strategies if you want, and you can run your own algo systems and have them automatically run for you. So if you want to have something run at 2, 3 in the morning, you can build that out yourself. Now, what about gold? We have another program here in gold. Today, this is had a great day. Another great day for gold. Caught the short today. Tried to get in another short at the end. Got clipped for, gave a couple bucks left back in profit, but another great trading session for the algos. And how do you know? Well, it shows you it went short here, and it got out of on a retracement stop out, and it trailed the stop on the balance and took that whole trade down. So it also went short, got stopped out for about, what, 60 cents. No big deal, no harm, no foul. All of the trade action today, though, for most of the market was, again, focused in the, what, equities market. So the live trade room, whether it's our stock positions, our analysis about being long the market has been dead accurate by the use of not one tool, but the right tools and a few tools that make logical sense when interwoven together. And That's the key, friends. I don't have the magic bullet, and I think that at the Traders Expo, the funny thing is that uh, everyone's there were a few people that were telling me that, hey, people are telling us how easy it is to trade and all these magical indicators, and I don't think it's as much of magical indicators as it is much as putting things together correctly. And so I think both transparency and helping to teach people how to trade right and have that confidence when you see a system, when you see the strategies, you see the performance over time, you can say, hey, this is what this is generating. These have great returns. This is what trading should be about. And that's why we have the two trading rooms. All right. Next, let's get into showing you a couple things here about some posts that I made this morning. In fact, as you can see, the post that I meant, we'll scroll back here. So this morning at 9:22 a.m., I said the IWM had a strong AD line reading. The weekly cumulative AD is breaking out to new monthly and quarterly highs, which is, again, not bearish. And I think I emphasize that with capitals, right? We need a price move to confirm this, which by 9:50, 5 minutes after I typed that in, or about a half hour after I typed that in, we got the confirmation. It was pretty cool. So as you can read through this, I'm absolutely hoping to see that we get more volume and money flow to support, as I just reviewed with you. So these are the kind of comments that we posted in, and I'll scroll back. So again, if we could get that one, look, I'm giving you what I've typed into our stock room. We need a double daily weekly close greater than one double nickel 33 in IWM to initiate a bullish momentum breakout. I'm not talking a move to only 158. I'm talking a move maybe up to 163. That's a big possible move for IWM. So that's been a long time resistance level. 155.33. So we need a little bit of proof if we're going to get super aggressive. And super aggressive means we're already long. Super aggressive means where would I add to the trade? So sometimes we don't look at where we should take a profit. Sometimes we need to think, where would we add to the trade and under what conditions? And that's what I'm trying to condition you about. When do you add to a trade, right? And this with the Russell, that's when I would add to the trade that we're already in. Not consider where to take profits, but when to add to the trade. So that's what we were talking about. It says at daily close level will move me back to the short to buy back the short 160 strike call in our August expiration 55.60 bull call spread. What did I do? 30 minutes after I typed that in, I sent an email out saying, buy this thing back. We are breaking out. And that was what we did. So just to follow through with you. Twitter, we gave this trade out. Look at the date, 7/22, 10:20 in the morning. Earnings on Friday, implied move $3. Option strategy, bullish. August, bull call spread, 38.40 strike, too wide for 65 cents. There's a few other things. On July 19th, I said, listen, by the way, BTW, CFTC COD data release shows small specs still short E-mini S&Ps, and they added to the shorts of Tuesday's close. Now, I covered that in the Traders Expo, and I believe that was broadcasted, but I don't know if we didn't really have a lot of time to go over what the CFTC, and I think a lot of people may have said, oh, that's nothing that I need to concern myself with. Well, obviously it is. Crude oil, this is just the comments that we post in the live trading room. And here, Philip Morris. We were long Philip Morris last week, and we raised our stops up. And, good thing, because we did book a profit, and then it nicked us with our stop with a profit, continue to go higher, which I was bent out of shape a little bit about. And where is it now? Lower than where we took a profit. So that's kind of cool stuff. This is what we do in our live trading room, friends. This is what we've been talking about in the market in these videos, if you've been seeing them. And I know a lot of folks have appreciated it and given a thumbs up on them, by the way. And I want to show you the weekly thoughts and observation. I keep referring to this newsletter here. This is what I put out each and every week. Now, this advisory service comes complete with what trades we're doing, other bullish signals, the review of the week. Here was something I put out at the beginning of July. I said, for ladies and gentlemen, if you're looking for longer term stocks and more of a passive trading experience, and you want some good dividend yields and stocks that are not at high valuations, these are some stocks. The names in bold are either ones we took profit or swing trade. Now, there's Intel, Target, GE, we're already in that. Delta Airlines, which exploded over the last couple of weeks. Bristol Myers dividend yield, they're going to have a bad report and they're going to pull back today because there was a drug issue that didn't have positive results. BB&T, we made money in that. AT&T off the chart, we made money in that. Walgreen Boots, General Mills, Terraform Power, and then Philip Morris. So it's not just I just throw stuff out there. These are actually stocks we're either in or actually added to our own portfolio. So this is what I try to put in every investor's hands. And a couple things that I wanted to say is I wouldn't want to get into, even though Starbucks had a positive move, Amazon, Hershey, Coca-Cola, they're at little nosebleed heights. I'm not saying that they're not good investments, but if they get punished, then we're going to have a problem with our stop outs. Also, more importantly, semiconductors, transports, airlines, materials, chemicals, and one of my favorite stocks, Illinois Toolworks. I've been talking about this all year. They are building strong technical chart patterns with both relative strength and volume positive money flows. Those are my harbinger. So at the end of every week, we give you what the report gives us of what we need as traders to put in front of us. What reports when they come out. Again, earnings before and after market closes. That type of stuff. Events. By the way, Congress is going on recess July 27th. By the way. The next Fed meeting, which is July 30th, they're going to announce on the 31st. And then for transparency, we don't just sugarcoat and say, look at all the winners. Here is the track record year to date for this year. And again, we've been doing this stock advisory service with PA Stock Alerts from 2010 to 2015. And we've been doing weekly thoughts and observations, which carried off on that for stocks and a few options. Now, this is as of Friday, and you can see some of the positions. If it's green, they're winners. If they're red, they were the losers. So here's AbbVie was a 7% loss. We had a 3.5% loss, a 5% loss, 4%. I try to keep these losses right around that area unless there's a gap lower against us. We got clipped on Dropbox. And then 2 days later, it went right back up. But that's part of what has to happen, right? Labu, 6%. We got right back in, 14% gainer. And you can see cumulatively net results. I think right now we're back up over 208% on a cumulative gain, both longs and shorts. Ironically, we've only taken 2 short stock positions this year, and both were losers. So that's where I stand about being bullish this year. Options. By the way, Russell 2K today, we just bought back on the Russell, the 155.60 bull call spread. We bought back and did get filled on the 160, so we're net long 155. That's how we put out our report. This is trades that are actually in the newsletter that get filled. We put a lot of trades out that some miss by a penny, maybe by a dime, but win, lose, or draw. Even a future spread that we did back in January, a knob spread, notes over bond futures, a nice trade. So it's designed to do on average a trade a week for stocks because a swing trade is 2-3 days. So we try to put out as quality trades for everyone for cumulative growth, and all around it's a wonderful publication. And I think that if you are interested in seriously learning and joining our community, sign up. Come visit us at Person's Planet and be a part of this growing community. And because not only will you learn about what to trade and how we put together Person's analytics together, such as Person's Pivots, the PPS, but other tools that we have, you can also piggyback. And you'll see right here, it says Stock Room. And if you click up here and went to Algo Room, and hopefully everything works and you should see an algo room populate. There it is. That's all you have to do, and you can click between the 2 rooms. We don't restrict who can go to which room and who can't. This is both trading rooms, and this is what we cover. So you can see and say, oh, are they still in a trade? When did the trade initiate? And you can piggyback on those trades because it's sitting here right in front of you with especially the strategy board that shows in the trade message. That's why that board's there. It'll tell you exactly what the trade is, what the time frame of that trade was. It a 5-minute, a 15-minute? What's the position? Long, short. That's what we do, as well as my commentaries that I not only say in the room, but what's really neat about this platform as well is that it also incidentally, which is interesting, is that we can look at the archives and look at recordings. And clients, you can go back and you can see these times that I talk, and you can say, what did he say again, and go back and review the recording. So everything I say is recorded. Really neat function. I hope you found value in this update video. Again, the Russell, if we can maintain 155.33, closes greater than that, especially into Friday. 162, 163 next upside potential. With that said, I wish you well. For those that came to Chicago, thank you for visiting me. And for those that saw me on TD Ameritrade's Market Drive, I hope you enjoyed that, because, it really did at least help people say, what are you doing? What is J Person Asset Management doing? And that's another element, is that even in our managed fund, we are long SPXL, we are long on TNA, and so we've actually put these positions on and monitoring. And how do we get those trade ideas? From the analytics that we put together forth that I shared with you in the video, for example, tonight. Thanks for watching, and I'll update another video as market conditions change. And once again, if you like what you see and you say, I haven't joined John Person's trading room, I didn't know he did this, come visit us. I think you're gonna enjoy what we do here. Thanks again, everyone. Have a great week.